Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Plenty to talk about this week, especially we're going to take a look at the consumer and the retail side of things more so than we typically do. But to get things started, let's go ahead and talk about what happened this week in the markets.
Yeah, so we've had a little bit of up and down week when we look at these markets, but we'll start on the hog side. Cash hogs, I'll say we're down about $1.75 this week. While when we look at that current lean hog futures contract, it was down nearly $3, although it showed some strength in the early part of the week, trailed off Wednesday, Thursday, and today. So down on both sides there on the hog side. The pork cutout value down nearly a little more than $2 this week, again, led by lower ham and belly prices. We've kind of been on this same story for a period of time. I just keep reminding us that we now have a pork cutout value 10% below where we were a year ago at this time. I think that is part of the reason why we've seen hog prices struggle to stay up with where we were at this point last year. On the cattle side, cash cattle this week, I'd call them up about $1. However, when you look at the feeder cattle side of the equation, I'd say steady to $6 lower this week on feeder cattle. I still think when you look at where feed costs have been up late, we've seen some weakness in feeder cattle with those higher feed costs that feed yards are beginning to see. The good news on the choice beef cutout value, we were 55 cents higher this week. Really a little bit of strength across the board on those cuts. That puts that choice beef cutout value about 1% over a year ago level. On the future side, live cattle futures were down 75 cents, while feeder cattle again down 225 this week.
Scott, as we take a look at what's going on both the pork and the beef side of things, I know you've talked about this in my absence, but are we really continuing to see kind of a tail, as in TALE, of two meats so far in 2018?
Yeah, so. It sure has been pointed that way of late. That pork cutout value 10% below. So this is kind of the side of this additional processing capacity that we need to deal with. We certainly have more shackle space, and I think that helps in terms of hog prices. But at the same time, we have to move the pork on the other side of that, and that's where I think we've stumbled a little bit as we've come into 2018. And I think, really, bellies is part of that reason. When we see belly prices that are over 20% below a year ago levels, well, I think we got a lot of lift out of belly prices last year, and maybe that's going to change. So maybe more pressure on hog prices as we look ahead relative to cattle. You got a choice beef price that's slightly above a year ago level. I think that helps keep cattle prices near year ago levels as we look ahead here for a while.
We know that demand has been fairly strong and has remained fairly strong for U.S. pork specifically, as we're talking about pressure on markets. But as we see and can have this contentious trade talk, we talked about the tariffs last week and some of the other things that are going on. Does that get the market and traders a little nervous about this massive supply of pork and a place to put it?
Absolutely, I think it does. I think you can just look at this week and go, why did futures markets trail off in the last few days? You can certainly look at some concerns over the trade side coming into play and maybe pulling those prices down. So in many ways, we may be keeping a lid on prices as a result of that trade uncertainty that exists today.
All right, let's talk a little bit about consumer confidence, and we'll talk a little bit about retail meat prices as well. Both of those reports, Scott, had a lot of good news come out of them.
Wow, if we could get a consumer confidence report every month like we got this month, meat demand would be really good for a long time. Some pretty phenomenal numbers when you put them in context here out of the consumer confidence index. The overall index came in at 102 for March of this year. That's 5.3% above where we were a year ago at this time, and another 2.3% above where we were last month. So, we start there with that overall index looking very good, and that's the highest level that we've seen since 2004. So some mighty rare air that we're in terms of consumer confidence. When you look at that current expectation index, that's the one that I think is the shocker, coming in at 122.8. 8.5% above where we were a year ago at this time, and 6.9% above a month earlier levels. That is an all-time record when you look at that current situation index. And for me, that bodes well for us on the demand side. That's the kind of domestic demand strength that we need. Perhaps we've seen a little bit of strength in that consumer confidence index as a result of some of the tax policy changes that we've seen. But that's a really good demand side story for us to be talking about.
When we take a look at the demand, is there a certain income or a tax bracket, I guess is the best way to put that, where we've seen more income or more gains rather than others?
Yeah, when you look at the makeup of that consumer confidence index, most of the growth seemed to be occurring from lower income households that were reporting on that survey, which for me starts to bode some good news for meat demand. Those are the folks, I think, when you put another dollar in their pocket, they're the ones that are likely going to use a larger proportion of that dollar on meat products. So good news, because I think they've been the segment of the population that's been slow to recover, from the downturn of a few years ago. So it's nice to see what's a pretty positive sign in that lower income group of households.
I think sometimes we forget about, not necessarily we forget about, but we put so much emphasis on global demand for our meat. We also need to pay attention and be reminded a little bit that we need domestic demand to remain strong as well to support prices as we look at both increasing supplies of both pork and beef and chicken.
Absolutely. And I think this is where you can start to see the effects of the jobs reports we've been seeing that have all been really positive for really a number of months by and large, starting to work its way all the way through the economy and giving us a lot better consumer confidence. So when you got 75% of your product being consumed domestically, that domestic market matters.
We talk about consumer confidence being strong. The other thing that we're seeing is meat prices and retail meat prices, strength remaining there as well.
Yeah, absolutely. So we got a retail meat prices out this last week. I kind of went back to do a little bit of comparison relative to, so I picked 2013 to 2015 as that point of comparison. So just what's been happening on the demand side. And I start by saying retail beef prices up 6.6%. You look at pork prices up over 8%, chicken up over 7%. You got higher retail prices, and over the same period of time, we're talking about higher consumption. That only occurs with stronger domestic demand. When you look at per cap consumption, over that same period, beef up 3.6, pork up 5.7, and chicken up 7%. We don't do that very often. It just continues to remind me that consumers and their demand for meat has been very strong. That's good news when you think about the growth in supplies of meat that we've been bringing to the marketplace.
Strength in prices is not just seen here and on the retail side of things. We're seeing strength in prices all over. And it looks like, as we talk about that on a global market, U.S. meat producers and U.S. meat production is under some increasing competition globally.
Yeah, so USDA is starting to provide us some early glimpses into what will be their April release of an update on the livestock side of the equation. Attaché reports are coming in from a number of countries around the world. I just for a minute wanted to make sure that we talked about that, for example, their 28 estimate of beef production globally, or I should say for the selected countries around the world, up 150,000 metric tons relative to where they would have been 6 months ago. So they're talking about growing production in the rest of the world on the beef front. On the pork front, up 745,000 metric tons. And so it's not only us that's been growing meat supplies, it's the rest of the world as well. They're going to compete on those global markets, and we're going to have to pay attention to what export demand looks like as that competition maybe gets a little stiffer.
Anything else before we get into our question of the week? We have a viewer question that we need to touch on today.
I think we've covered the major topics.
All right, so I'm going to read it verbatim. Larry Matthews submitted a question to us online, which you can do as well. We'll tell you how to do that. He says he's hearing a lot of economists tout NAFTA as a good deal for U.S. beef producers. So what he wants to know is, how can NAFTA be a good deal for America when Mexico exports $1.8 billion more beef into America than we ship them. He also goes on to say, with everything that we import from Japan, how can our country allow Japan to impose a 50% tariff on frozen U.S. beef sales? It's been reported that the United States has an $800 billion trade deficit with the rest of the world. Many countries are also manipulating their currency to favor trade for themselves. Maybe it's time for our country to fight back. Scott, I will give you the floor to respond.
Yes, I'll say thanks to Larry for that simple question. And anytime we talk about trade, it certainly gets difficult. So I'll take this a little bit at a time. Number one, I think when you look at where President Trump's been late on all these trade agreements, probably taking a stronger stance than we have for a long time. We pulled ourselves out of TPP, going maybe that's not the deal that we want at the end of the day. We're trying to renegotiate on NAFTA, and it seems to me that those negotiations are certainly for us going hard in terms of we're going to make sure we take care of what's going on here in the U.S. So I do think you see a change perhaps relative to where other administrations have been, where we're fighting a lot harder. Now, does that help agriculture? So it's not just ag that matters when we talk about many of these trade agreements, and I think we have to keep all that take all that into perspective. On Japan in particular, I think the fact that we pulled out of TPP has allowed us to stay under these old WTO agreements, which in fact had this kind of safeguard provision that increased the tariff on frozen product from 38.5% to 50%. Had we successfully negotiated TPP, I think those safeguard provisions would be waived. They're waived for Australia now, who has a bilateral with Japan. So I think we're certainly going to try to renegotiate those, and maybe we do it on a bilateral basis. But currently, what we're operating under there in Japan has its roots back into the early 90s when we signed the last WTO agreement. And so I think we would like to see those markets open up a lot more, but till we get a new trade agreement, that's hard to really see much change. NAFTA, it's a good question. All right. So I number one, like to remind folks all the time that I think what we're able to export to Mexico is some higher valued beef products. We're importing some lower valued grinding kind of product that we frankly, in some cases, need here in the U.S. So the mix is important. Yes, we can look at the overall dollars and be worried about that, but the ability to bring in some beef products that we need relative to the higher valued stuff we can send them to Mexico, I think is important to the answer of why we want to continue that. And I will say the overall effects of NAFTA, I think it's helped the Mexican economy grow more, and frankly has helped them be able to afford some of that higher valued beef products that we ship to them. We always want probably, and as an economist, I'll say we always want freer trade. Get rid of the impediments to trade. Let us compete. I think when you look at U.S. agriculture, we're certainly set up to compete well as we continue to see trade barriers torn down in front of us.
I think there's a more complex answer to when we get into those trade questions, as you and I talk a lot about what goes on and the gives and takes of our relationships with other countries. So very interesting to see perspective and to take a deeper look at that.
Absolutely.
Scott, as we wrap up, I think we should probably take a look at that drought monitor again. And it looks like the Southern Plains is struggling. What does that mean for cattle and livestock producers?
Yes, I do think it's important for cattle producers to be paying attention to what's going on in Oklahoma and Texas. We got a little reprieve here in Missouri with a lot of moisture of late, but it seems like it's still very dry, and we got a lot of red in that drought monitor map. I remind folks all the time, boy, that looks mighty familiar relative to where we started 2012. And if we were to see a drought that continues and escalates into the summer months, many of the things we talk about from a price standpoint are off the table. A 2012 drought scenario in 2018, and in the short term probably gets us lower cattle prices. We're going to try to liquidate and push some cattle otherwise that would not go quite so quickly. So that the short term might be a little more negative. However, if you want to talk about $2 and $3 calves again, that kind of drought might actually suggest we can get there as we look in 2019 and a little beyond. So as folks make decisions, that's one of the areas I continue to watch, just to see if that red area continues to expand as we get into grass growing season in other parts of the U.S. important to the cow-calf industry.
And finally, Scott, as we look ahead to next week, what reports are we watching for?
Yeah, so we get several reports on tap for next week. On Thursday, we'll get cold storage and livestock slaughter. It'll be interesting to watch, for example, what kind of pork belly inventory we might have now, especially given how much lower prices are relative to a year ago. Then on Friday, it's another cattle on feed report. We'll see whether placements continue to run above year-ago levels. It might help us get a handle on just how many cattle we have out there that we get a feed this year.
Plenty of March Madness of our own kind to get into next week.
That's right.
I hope you've enjoyed the start of March Madness. I've been on maternity leave, and so it's been great to watch markets, obviously, but to also watch a little bit of basketball as well.
You can say go Mizzou Tigers, right, Megan?
Boiler up. Scott, good to see you. We will talk to you next Friday.
Very good, Megan.
And if you have a question like Larry, you can submit it online. Go to our website, brownfieldagnews.com. Click subscribe to have our weekly livestock market update delivered to your email box every Saturday morning. But if you have a question, you can submit it or a comment there as well. And for market updates, make sure to check out John Perkins' Market Update twice daily. I'm Megan Grebner on Brownfield.